for coming. This is the presentation on buy-side and sell-side research. I guess I just start off the slides in the back, but I'll give you my quick background on me, and then we'll go back and we'll do the slides. My name is Eric Jenko. I graduated from the University of Richmond in 2002. I was a finance and accounting double major. I was a Spider Fund general manager. I interned at, I guess the way I got to go to Wall Street, I interned at Goldman Sachs in equity research in the summer of 2001, covering natural gas and MLPs. I worked full-time for GS after that internship with the same group, starting in 2002. I switched sectors to industrials and machinery in 2006. Then I left Goldman in 2007 to join Longbow Capital, which is an equity long-short hedge fund. My original boss from Goldman Sachs had gone to move over there, and he recruited me to follow him. And I left Longbow in September 2010. We closed the infrastructure fund that I worked on, and that was basically the same time I left there. So that's kind of my background. So what is investment research, right? It is, the sell side, you're writing reports, you recommend buy, sell, hold, you call on clients, you do not invest, you are not an investor. You make money through for the firm through broker votes and supporting sales and trading operations, and it's very difficult to construct a P&L statement or a profit and loss statement for this. So it's tough to know exactly financially what research contributes to the firm, which creates a challenge for being in that business and managing that business and everything else. On the buy side, you produce research internally for investment purposes. You make money for the firm by identifying profitable investments and trades, and that's it. So let's see, what's the next side? What's the difference, basically? Sell side, it's about research and client service, publishing ideas and marketing them. And on the buy side, it's all about research, pure research, no marketing, and you are the client. So there's a difference in that. Another question is, how are the jobs similar and different, or we're kind of on that train still? Sell-side research, usually at a large bank or an institution, you're probably going to start with an analyst class of peers. You're usually assigned a specific sector, and the job, it's lots of phone calls, you're pulled in a lot of directions, banking, salespeople, buy-side clients, and especially your senior analyst. Your senior analyst is basically your whole life when you're on the sell side, and they can make a huge difference in quality of life, quality of experience. So that's really, really critical, and it's probably more so for this type of role than if you were to go into capital markets or the sales desk, because sometimes there's a lot of senior people that you work for. In this instance, you're working for one, so you better have a good relationship with them. Again, how are the jobs different? There's no standard description for a buy-side role. It can be a mutual fund or a hedge fund. It can be sector-specific or generalist. Buy-side jobs are pretty much always style-specific, though. So basically the difference is, like, if you go to work for an equity long-short hedge fund, you're working for an equity long-short hedge fund. If you go to work for a sort of long-only mutual fund that's a value fund, you are doing value-oriented investment research, and that's what you look for. So it tends to be more narrow in that respect. Whereas if you're on the sell side, your clients are all different kinds of firms. So you could one day be talking to Dodge & Cox, which is a mutual fund that is a kind of renowned value investors, and they want to know about the next 10 years of the stock that seems out of favor. And the next minute you could be talking to a hedge fund that's catalyst driven, and they want to know what the next 10 minutes looks like in the next day. So that you see a lot of different types of styles of investing from the sell side. But on the buy side, you were pretty much married to one. And again, like I said, you are the client. When you're on the buy side, there's a limited number of people usually that are going to be bothering you for things. So like if your PM, picks up the phone or yells out of his office at you, hey, what's going on with the stock? That's the person you have to answer to. When you're on the sell side, your phone is constantly ringing. You could be in the middle of trying to figure out what you think about Caterpillar, for instance, and then Fidelity calls you up and says, hey, I need the following charts and the following models, and you have to stop what you're doing and answer because they're Fidelity and they are the client and they're paying your bills. So that is a very sort of different lifestyle. So client service is something you have to decide whether you want to be a part of or not. What is the interview process? Follow the markets. You do or you don't, and it's tough to fake. You can try to fake it, but you're better off to follow the markets. Be interested in companies or an industry. It's easy to find an industry that you care about. If you worked at Abercrombie & Fitch over the summer, they have a stock. That's a retail name, and if you like to follow retail and you have some experience in it, that's a fine thing to do. You could also figure out what your parents do. My dad growing up worked for Superfresh at A&P. They're not a public company anymore, but they were, and they had a stock, and he probably knows a lot about retail and managing retail businesses. So I certainly asked him about that. The other thing is you have to come in with an investment idea or a stock pitch. And you probably hear this a bunch of different times in your packets that you received. In section 6, I believe, there's a 1.5-page sort of sheet on Cummins, the diesel engine maker, that I sent to a hedge fund manager in June, which is kind of gives you a sense for when someone says a stock pitch, what you kind of want to strive for. You won't quite get there, but it's, what's the company do? What are their main products? What are the divisions? Then what are the investment controversies? What's going to drive the stock? Okay, what are your views on them? What's valuation? And what are the risks? And maybe one thing I could have added to that but didn't was catalysts. So like what has to move the stock in the near term? Other resources for you. Vault.com, Career Guide to Investment Banking. If you haven't read it before today, it's okay because this is an informal session, but don't actually show up and talk to anyone on Wall Street without actually reading it, because that's where you go to find out what is sales and trading and what is, you don't get into this session. You want to know that before you take someone's time privately. So that's something you have to read. Professors are also a great source. It's kind of what's going on in the industry and where things are going. They have experience. CFA website for those of you that are finance majors and thinking about the CFA track. Once you're in, or if you're in that process, or once you become a charter holder, they have a job line thing that lets you save searches based on whatever keywords you want, whatever geographies you want, and it's just fantastic. It's one of the best things I've seen. So you should, if you can get onto that, get onto that. Glowcap.com is not something that, Glowcap won't care about you now, but it's an online headhunter, and they post all kinds of jobs for hedge funds, private equity funds, investment banks, all different areas. You search for, accounting, everything. So you can sign up for that. I think it's free. You can get on there. You can apply for stuff on there, but it's mostly for experienced hires. But it's a good thing to be involved in even once you're on Wall Street, because you can see what's being posted and you can kind of see what else is out there, which I think is an important thing to monitor kind of at all times. And the other thing is the Richmond Alumni Network. You have to use them. It's very, very important. It's how I got to Wall Street, and it's something that I'm using, currently even today, as I think about, potentially switching careers. So that's a part of it. That's basically, I guess, all of my formal slides. But the biggest thing I would say to take from a day like today is to talk to as many people as you can and try to understand the personality types that do different jobs and why they want to do certain things and what makes them successful, and figure out where you fit in that, if you fit, and go in that direction that way. Let that be how you choose. Because the reality is you can do anything for 2 years and switch to anything else. That's fine, right? That's a relatively easy thing to do. Hopefully the job market's easy. That's fine. But if you go down a road for 10 years, okay, and you say, you're go into sales and you do that for 10 years, you're a salesperson pretty much for life. You're not going to be a salesperson for 10 years and then go be an investor. That doesn't work. You will be a bad investor. Okay, you're not going to go down the investment research path and then do buy side maybe 2 years out of school and then be a buy side investor for 6 or 7 or 8 years and then go serve clients, because you will be bad at it. I think I'm kind of bad at client service in a way I don't want to be necessarily. That's one of the things I think about when I think about whether or not I want to go back to sort of sell side research from the buy side. How much do you want to serve clients? How much do you want to be calling on clients? One of the things that's really, really cool though about the sell side and different than the buy side is it's very public. So one of the things I liked about the sell side, okay, is that you come up with an idea and you go out and market it, and people don't necessarily agree with your idea early on. You come up with something controversial that no one else is talking about. The first reaction from clients when you go out and market it to them is, you're out of your mind, you're crazy, you're totally wrong. All right, if that turns out to be right, okay, everyone knows you came up with it. They know you were the first person to say it, and they know you went out on a limb. That's very rewarding, and it's really exciting when you can do something out of consensus and turn out to be right, and it's very visible. If you do that, if you come up with an idea on a stock that's out of consensus as a buy-sider, and your firm goes long that stock, or short that stock, or whatever, you take a position and that works out, it's very profitable. But the only people who necessarily know about it are at your firm. Depends. You can call people ahead of time and be like, hey, I'm in the stock and this is cool and I think this is going to happen, and that works fine. But it's not as public. But being on the sell side is all about sort of building a franchise, deciding what you want to do, and you're out there sort of marketing your franchise and marketing your name. Buy side, again, it's just different. It's about pure research.